What have you learned in terms of where we are in the bankruptcy cycle? In other words, where do you weigh in on that debate in terms of how many more bankruptcies we're going to see over the remaining 6 months of the year? 4 months, 5 months, where are we? July, that's right.
Yeah, so let me be very clear. So we have trailing U.S. speculative grade corporate default rates at 5.3%. Our view is we see that rising to about 9% close to year end. We haven't really moved that target in the last month or two. And then I think the big debate is increasingly on what the curvature of the default outlook looks like for 2021. We have rates that are moderating early next year through the first half towards 7%. And we essentially think the market right now is pricing in about 5.5% to 6% default rates. So we are above the market. We think the market is too optimistic, but it's not night and day. I think from the survey side, I would just give you the most interesting data point we got in our recent CFO survey was, again, the Fed is working to improve lending standards. The fiscal programs, like a prior speaker talked about, the PPP loan programs, Main Street lending facilities, those are a step in the right direction to provide companies with liquidity, a bridge essentially to a recovery, and you see that in the underlying data. Having said that, even though companies feel like there's a lot of support from the government with loan programs and lending standards aren't tightening nearly as much as we feared, we have 18% and 25% of firms that noted they were very or somewhat likely to miss a loan payment over the next 12 months. So I think the bottom line is liquidity is helping at the margin, but solvency concerns are still front and center. And I think it's really going to be in the small businesses where you see that. So in the next few weeks, what we're really watching is really the leverage loan firms, those smaller firms and middle market firms, because that's really where we've seen initial indications that there's stress that is not really being relieved by the Fed. And that's where we think default rates really could pick up aggressively. So if we're wrong and we're not negative enough, that's really the area of the market that we're looking at in terms of the reports that are coming in the next few weeks.